We think that UK investors should have some exposure to their home market, but the slew of uncertainties caused by Brexit complicates the situation. It's very difficult for many businesses to make long-term investments while we just don't know what sort of relationship that we'll have with our principal trading partners. This impacts spending across the economy. At the same time, the value of the pound in the foreign exchange markets is sensitive to the outcome. Our approach has been to have less invested in UK equities than we might normally. We are likely to continue in this stance until we get some sort of political settlement. Well, there's been a steady drip of disappointing economic news, which is all pointing to a slowing in the global economy. This is most obvious in the manufacturing sector, but there are hints that the service economy may also be slowing as well. This escalates the risk of recessions emerging, and big manufacturing nations such as Germany may already be in recession. Bonds provide a guaranteed income which becomes more valuable during more troubled economic times. Bond prices have been rising as a result, which has driven yields lower. Well, we think the odds of a recessionary conditions in developed economies such as those in Europe and in America are rising. A recession is now probably more likely than not. We follow a number of economic indicators, some of which are now flashing recessionary warnings. Other indicators are also heading the wrong direction. We're not expecting a severe recession to occur, such as the one which happened in 2008, more of a gentle contraction. This will impact company profits, unfortunately. We're becoming more cautious in our portfolio positioning. We don't wish to sell down equities at this juncture. This would involve switching out of high-yielding assets into very low-yielding assets. Instead, we are buying government bonds, which have the potential for capital gains if a recession strikes the US economy. This should help support the portfolio in a worst-case scenario. We are looking to redeploy some equity exposure into less risky companies, such as infrastructure firms. These businesses will be less sensitive to any further slowing in the global economy and help insulate the portfolio from the impacts of a recession if one strikes.